Okay, so far in the last couple weeks, we've had good CPI number, which helped the markets. We had the good PPI number, which helped the markets. The CPI number was the consumer inflation, basically, numbers. And the PPI is manufacturers' inflation numbers. So what we're trying to talk today about is the state of the economy, because the economy is the biggest, let's say it's the heartbeat of the country. So if the core of the country isn't doing well, everything else around it's going to crumble. So what I want to talk about today is we had retail sales. Those numbers came out today. And one thing I'm going to ask you guys is stop spending. Okay, so we're never going to cure inflation if we keep spending as much as we keep spending. Okay, so let me get over to what I'm talking about. So today's headlines are right here. Treasury yields are flat as investors digest inflation data, which came in fantastic. And then we had the retail sales numbers. Well, Dan, what are you talking about? Well, look right here, guys. Core retail sales and retail sales. What core retail sales is they strip out some pieces of the puzzle, but let's just look at the numbers in its existence. Month over month, retail sales, the number you're seeing right on your screen, right here in the middle number, was expected, or the last reading was came in at 0%. The expectations were 1% increase. It went up 1.3. Okay, but if you just look at now, you just look at the retail sales. But let's dive into the core retail sales. Look at core retail sales. The expectations were 0.4. Okay, last reading was 0.1. We jumped all the way up to 1.3. Okay, so why am I saying this is bad news? Well, there's a lot of reasons, because we're still continuing to buy, but how are we buying? That's my concern. Well, we're starting to buy on credit. So what you're seeing here is a CNBC report that came out. Household debt soars at its fastest pace in 15 years. And credit card usage surges. Okay, so you might think, well, these people are using their credit cards to buy their stuff, and then they're paying it off because they have excess cash. Well, let's go into the excess cash piece of this equation. So we go over here, and I'm going to get my head out of the equation here. Here's where net real disposable income is. This is how much each person in the U.S. has as disposable income, extra income after they pay all their bills. Here's where it's been basically over history since they've been watching this thing. Look how it nominally goes up each year a little bit and continues to go up, and then it has a blip down every once in a while. But then look right here. What in the world happened here? Well, 2019 and 2020. What happened there? The pandemic. What happened during the pandemic? We gave out free money to everybody. Unemployment benefits, PPP, other things. Families get checks every month from the government. It was overdone. And then what happened with the Fed is they brought interest rates on basically everything down to zero. So people had way too much money. And what did we do? We saved it for a little bit of time. Then we started spending and spending and spending and spending. So here's my concern. So now the Federal Reserve now is saying, okay, we got inflation in check, but we still haven't really taken a bite out of the unemployment numbers, or the employment numbers, I'll say. So here's where we have the unemployment numbers right now. They're expecting this to go, they're hoping it to hit, another 1% higher, maybe in the 5% range. So that means a lot of people are still left to lose their jobs. I'm still not on that fence yet. I think people will start losing jobs. You saw in Facebook and some of those internet companies just laying off thousands and thousands of people. But you got to remember, it's also holiday season, and there'll be holiday people coming in check. Then there's still a ton of job openings that we could see from the JOLT index that we monitor. The JOLT index is showing 2 job openings for every 1 person looking. So if you're looking for a job, there should be the ability to get a job. Now, how good those jobs are, I don't know, but do your diligence in trying to find that best job for you. But what happens if basically we run out of money, okay? Interest rates are going sky high. People are using their credit cards for their debt. They start spiraling in a downward trajectory. What happens then? Possibly, maybe foreclosures are going to start hitting in rampant style, because in the headline news, you can see right here is U.S. foreclosure starts increased 167%. But before you get your panties in a little bunch there, let's look down to the numbers. Here's the numbers. Does this look like it's really, jumping off the chart? No, these numbers look like they're jumping off the chart, but these numbers do not. Is it upticking? Yes. Is it upticking? Yes. But is it out of control at this point? No. One of the big reasons is back in these days here, we had a lot of subprime mortgages, and we had a ton, probably at least a third of mortgages were adjustable rate mortgages. Again, remember, they were bad underwriting standards. Then throughout the years, we learned our lesson. People got fixed rates. Rates were historically low, the lowest ever in history. They locked in. And now, unless people really get in a jam, they shouldn't get foreclosed on. Because to look at it this way, you have a fixed rate, so your payments aren't going to really move, and you have a ton of equity in your house. Basically, we've seen house equity in the last 2-3 years going up at least 30 to 50%, and even higher in some areas. So I'm not looking for the foreclosure wave to basically crush the economy, but we have to stop spending, folks, because the only way to really cure inflation is to drive down demand, and that's what the Federal Reserve is doing. And I think they're doing a pretty good job at that because demand is starting to drop substantially. But we have, as a society, we got to get away from all these credit cards that we're using, okay? So how does this all pertain to housing in the economy and interest rates and everything else? Well, the dynamics, the health of the economy will show us show those numbers in the housing market. Because if your country is strong, economically strong, jobs report strong, and income strong, people will then strive for home ownership that then creates wealth. I'm not saying you have to buy a house. I don't care if you buy a house. I'm just trying to educate and inform you guys before you really make that decision. Is, buying a house, worth it for me? What I'd like to say in that realm is, if you don't plan on spending at least 3 years minimally, 3 years, don't buy a house. Okay, that's my advice to you guys. If you're spending a longer time than that, maybe consider it. Look in your areas, check out available locations, check out those realtors that are out there that are really working hard for you. They're not just doing those doom and gloom videos. Find one of those realtors that they're really doing their due diligence and trying to find you get basically a needle in the haystack maybe, or a jewel in the rough. Because not all realtors are on the bandwagon that the world is crashing. They're actually out there to help you guys find a house when you're looking to buy a house. So that is my report for right now. So let's get over to the reason why you're really here. Mortgage rates. So what's going on with mortgage rates right now? Well, we're going to look in our crystal ball. Let's refresh this to get current data. Well, this is what's going on with the mortgage-backed security bond on Wall Street. So instead of watching the Treasury bills and other markets, we watch this. Why not? Because it's the mortgage bond that trades on Wall Street. That's its yield. The yield on this bond is actually moves over to your mortgage rate, and that's what creates the rate. Okay, so we watch this bond. What happens on your screen you're seeing is the price of the mortgage-backed security bond. The good news here is, as the prices go up, there's an inverse relationship on the price and the yield, or the rate. So as prices go up, yields go down, meaning your mortgage rate yield goes down. So today we're probably going to see maybe about a 5 tick down. So let's go over and see where mortgage rates are right now. Here's where mortgage rates are. We are at 6.61 on the 30-year. So these are mortgage rates published by Mortgage News Daily on a daily basis. These are not my rates. These are the top 6 products people use when they're buying or refinancing their property. Now, these are national averages. So what Mortgage News Daily does is they survey mortgage lenders all over the country, and we send in what our rates are. And then they do a blended average, and they post those. So if you want to get these every day, if you're a mortgage person out there, maybe you're a high schooler or a college person taking economics or business classes, check these out. So these are charts. So you can check this out down below. You can subscribe to Mortgage News Daily's daily report, or you can subscribe to my newsletter down there that gives you this and a slew of other information. So what you're seeing right now is mortgage rates are coming back down. I'm seeing a lot of people saying, wow, great, rates are coming back down. They're not coming back down that much. Well, look at the differences that we're seeing right now. Mortgage rates were not too long ago at 7.37. Now they're at 6.6. So about a 75% basis point drop, 0.75% drop in rates. So if I said last year rates went up 0.75%, and the world would freak. Okay, so now you're saying they're down 0.75 point, and people are like, yeah, so what? It's not really going to matter. Well, it's going to matter. So you're going to see these rates probably start to tick down a little bit lower and lower and lower, because my expectations here, I'll give you my forecast of what the Federal Reserve is going to do next month. They're going to come in and they're going to raise rates one more time, 50 basis points. For those that don't think 50 basis points is a lot, it is a lot, and especially adding to all the bumps that they have so far this year. So I'm expecting them to come in and do 50 basis point bump, and then from there, their wording is going to really start to get a little bit of dovishness. So I'm not saying they're going to pivot. I'm not saying they're going to start dropping rates. What I think they're going to do is start to hold off. And maybe in 2023, there might be one adjustment, the first meeting of the Federal Reserve, bumping the rates up a quarter maybe. But my hopes are they take their foot off the gas and just stop after the December meeting and let the markets digest all the data, because we don't need an economic crash, especially in jobs, that then will trickle down through the economy and squish everything. So that is my report for today. So my name is Dan Frio. I do the mortgage, the rate update every morning to inform you guys what's going on in the real estate market, where mortgage rates are, and also helping those out there to buy their first house or maybe their first rental property. So if you're in that camp and you need some help, you need some advice, please reach out to us. We're a mortgage advisor. We're nationally chartered or federally chartered, meaning we can help you anywhere in the whole country, including Puerto Rico. So if you want to reach out to us, please do. The best way to do that is give us a call right up here, 844-775-5626. You can apply online. I'll keep moving my head over. You can book a meeting. This is really cool. You're going to open the calendar right here, and it's going to open up our calendar and give you any days and times that I have available for you to do a one-on-one consultation. If you want to book an event on YouTube, you can do that. If you have you're a realtor out there and you want to get on our referral program, you can sign up and schedule a meeting with me on that. But if you're looking for a home at first lien home equity position, which we're doing a ton of these, or you'd want to do just a one-on-one consultation with me, you can click there. So that is my report for the day. God bless, guys. Thank you so much for watching. If you find educational value in this video, plus entertainment value, please don't forget to subscribe. Hit the bell down below, so every time I post a video, you get an alert. And we will be back live today, me and Kyle, answering all your first-time home buyer questions. So visit us today at 5 o'clock Eastern, 4 Central. We're going live, so we'd like to answer any of the questions that you guys might have out there. If you're a first-time home buyer, investor, maybe you're a realtor, maybe you're a student, maybe you're a college person doing a paper, please join us. Ask any questions that you have. We'd love to answer. So thanks for watching, guys. God bless. See you at 4 o'clock my time, 5 o'clock Eastern. God bless. Bye-bye.